Hello, everyone, and welcome to another episode of the Financial Advisors Want to Know podcast. I'm Catherine Tindall. I'm a CPA with Dominion. We're a CPA firm where our focus is helping financial advisors navigate income tax planning and compliance for their firms. On today's episode, we have Nancy Jacobson, who's a fellow CPA. I promise in advance we're not going to get too technical. Two CPAs talking to each other. What could go wrong? So I want to welcome you, Nancy, for coming on the show. She is the founder of Xtended Financial Resources. She's got over 30 years of experience in the industry. And for the last decade, she's been helping RIAs utilizing real-time data, efficient systems, and strategic planning to increase their profitability. So thanks for coming on the show today, Nancy.
Thank you. And yes, it's easy for us to just nerd out on the CPA stuff.
We're not going to crack open the Excel, I promise.
Right.
But we were having a good back and forth in before we started the episode, talking about just the importance of real-time financial data and the impact that it has on profit margins. Because for us on the tax planning side, we're kind of the end, the end of the cart, right? Like we're dealing with, okay, this is what this is what performance is expected to be. All right, so what are we going to do about the taxes? Like we're the last part of the equation. And for you in the fractional CFO role, you're at the beginning, right? Because you're not only getting the actual correct data in, we have to be forecasting for what's happening. We have to be in the future.
Exactly.
So when you work with firms, maybe we can just start the conversation talking about, in your experience working with these firms, the change that they experience going from not having real-time data to having real-time data, and what that does for the management level.
Right, because it does have an impact. I mean, just imagine for you, if you get a data, if something big happened and you know about it, not after the year end, right? When you're like, oh, shoot, if I had known that, we would have changed your tax strategy. Yeah. But as it's happening, right? And think of that with every decision. If you're measuring and you see what's working and what isn't, you can pivot and be proactive. People always think of the accounting as something that's just historical. But if you're keeping real-time data and you're looking at the numbers, they tell a story for it to be data, for it to be proactive and future telling, more so than just this happened last year, right? But you have to have that data so that you're not working with basically obsolete data. Right. And so you have to have it in a timely fashion in order for you to be proactive. And that's the big difference.
So from like an operational standpoint, when you're working with firms, when you say timely data, real-time data, like what time frame are we talking about? Is this?
Okay.
Yeah.
Yeah. So when I work with a lot of the clients, I'm seeing that everything coming in as it's happening. I'm not waiting to close. Like you'll know your month end close and your financials for the month. You should know that in a matter of days, not weeks, a month, next quarter, right? Mm-hmm. Not like next year when you put everything together and hand it to your tax accountant and then expect them to do something other than just report what historically happened, right? Yeah. And that's a difference. But I also see it like cash and everything is reconciled at least weekly, but oftentimes almost daily it's looked in. And if you see something that wasn't in the plan, it wasn't on the budget, it was something that really changes what was forecasted, you could say, whoa, what happened? And do we have to pivot? Or, wow, this is really working. Do we have to change our capacity, right? Do we have to hire? Do we have to? And that always costs a little more before the person is up and running, right? So do we have to plan for that now that this happened? If you see it as it's happening that fast, you could make decisions, right? And then you could look at knowing what was planned. You could look and see, why did it change, right? What happened, and make a difference, right? And just imagine the impact that has, right?
Yeah. And so I guess for firm owners, what are the things that they should be doing maybe on a daily basis or a weekly basis to make sure that this is happening?
Right. On a daily basis, and like you said, even weekly, if you are looking at the bank account, reconciling all of that, accounting for it, and comparing it to what you had planned for. Like, is there anything in that is off? Were your revenues off from your CRM, right? Did those match of what you thought was coming in? And there's a lot of great reasons why they might not match. But then you have to know why it didn't match, right? Like, to look into that. So it's really looking into all of those numbers and what it's saying and seeing it like on a weekly basis, if not daily, as it's happening, right? And knowing it ahead of time.
Yeah. And I think, something that I've found to be successful for
Mm-hmm.
these kinds of things is really, knowing what you want to be seeing, but then really delegating the responsibility of putting that together on somebody else's plate. Because if you're
Right.
running the firm, for instance, like for myself, when I do my
Right.
my daily sync with my executive assistant, there's certain things that she shows me every day that she goes and finds the information and gets it back to me, or things that we check every day, where I'm not having to go and field that information. It's
Right.
just part of what our daily schedule, and it doesn't fall on me to put it together. So I think that's a
Right.
big component too, is, figuring out how to functionalize and systemize the process of what you need to be looking
Yes.
at, and then getting it off your plate so that you're really just in review
Yes.
mode, instead of, having to assemble things
Right.
yourself.
Oftentimes the owner or the it shouldn't be bogged down, because with that those tasks, right? It's to have the systems in place and the processes of that the information then gets to you, right? Because even if you have the system in place that somebody else is dealing with it, they might not know to, oh, that's a big deal, right? So it's that, okay, so you have the system in place, but then is the system, if this is anything's off, what happens next? Have that system in place too.
Yeah, absolutely. And so beyond like the keeping the real-time books, so we keep real-time
Mhm.
books, we look at the books and see, okay, what is this compared to plan? How do we need to change things? How do we need to pivot? Kind of goes into the next step of, okay, comparing to plan and
Right.
budgeting in the budgeting function. So could you speak to that a little bit, of what you've seen firms be successful with when it comes to setting up a budget, setting up a plan for themselves? Just a slight interruption in this conversation. I wanted to bring to your attention two things that are important for you to know. So, we're always at the mercy of social media algorithms. So, if you can subscribe to the show, that would mean a lot to me. Even more to me if you can leave a rating and let me know what you think about it. But we have a new newsletter that's coming out. It's going to be very active in 2025, that is specifically around tax issues that I'm seeing advisors face in their own practices, changes in legislations, and the pieces that I think are critically important for you to stay ahead of as an advisor with the new administration. So, nearby, wherever you're interacting with this, will be the link of how to sign up for our newsletter. Also, nearby will be the link to my LinkedIn, which is the best way to get in touch with me, learn more about what we're doing for advisors in the tax strategy and compliance work that we do, and also to get access to the various tools and interviews and things that I do, specifically designed to help you improve your practice, improve your own tax situation, etc. So let's get back to the episode, and thanks for tuning in.
Yes. There's a saying that a goal is just a wish
Mm,
without a plan, right?
yeah,
And I love that, because you could sit there and make your goals for the next year, but if you don't have a systematic plan and then check in and measure it, right? It's you're just hoping that at the end of the year it happens. And
yeah,
so if you create a budget, and a budget is more than just, okay, take whatever last year's number and increase it by a certain percent, right? That's a place to start,
hmm,
right? You can take and look at, but it's really looking at each number and deciding what realistically are we going to spend next year. right? And this is any size firm. If it's the small, the solopreneur looking themselves at all of the data. But the key thing is to have good data to start with, right? And to try to have the data ready to do the budget, right? So that also talks about the importance of keeping the real-time data and to make sure that it's accurate. But once you have that and you start looking at that, you also look at your pipeline, right? What are your expectations of growth, right? And then at what point, there's capacity planning. At what point have you hit with growth? Do you need to hire more people to give them the level of service that they're accustomed to from, right, with your client relations? And so it's planning for that ahead of time, that once you hit that growth, so then at this point in the year, you're going to need to add new people. What are those costs? There's salary, and then there's like subscriptions to computers, equipment. The employee costs far more than just the salary, right? So you have to plan, because a lot of times they'll say, okay, well, it's just the salary, but what about all the other costs, right, that come along with having an employee? And to add and plan for that ahead of time. And also to plan, sometimes people say, well, once I get the clients, then we'll add the people. But if you're over capacity, now you have to kind of, it's a timing thing where you got to kind of add the person just before you win it, because it takes a little time, like to train somebody and to get them up and running. And so you want them to be able to be up and running, but while all of your other clients continue to have the experience that they've been grown to expect, right? The good clients experience they've grown to expect, and to have a wonderful onboarding experience, you have to have them up and running. Yeah. So there will be costs before you'll get that revenue coming in. And so to really plan for that. And that all comes in the budget, right? That's all coming in the budget when you plan for that to happen.
And when, I think something that I think a lot of firm owners experience this pain of just, you increase the revenue, you get a profit bump, but then you hit a plateau because you have to hire and onboard somebody and they're not going to be fully at capacity. And then you do it again. Like it's this step kind of, game, because you do some client acquisition, then you have to do talent acquisition, which drops it. Then you fill up that new talent that you got, but then you have to be ready for the next one. And it's
a dance.
It's a dance. And so I think an important component of that as well, that it's really tricky, but getting this down is, especially if you're going to grow aggressively, is making sure that like your client unit economics are down in terms of, okay, if we're bringing on this, if we're bringing on X client, how much time capacity is this going to take?
Right.
Who's going to handle the case? How much capacity does this person have? How are we going to be able to deliver all of that? And, it's at the macro level, you need the numbers to work in order for the P&L to come out the way that you want it to. But it's really at the unit economics portion is where a lot of the, detail work needs to happen. Like I've talked to firms where, they'll tell me how much they've got in AUM, and then they'll tell me how much they've got in top line revenue. And I know that the unit economics is an issue just from that relationship. And it's like, oh, I bet your team's burnt out, aren't they? And they're like, yeah, they are. And it's like, you know what?
Like I can tell you why. And the cost of turnover. And that's the thing. Even with capacity planning, you see it so much, especially at the beginning, but I see it even throughout with like really successful firms where the capacity is planned at 100%. And they're just expecting, even with the larger firms, where we have people to make up for it, but then you don't. And then you have a worse problem because now you have matriculation.
Yeah.
And now it's even more of a burden. And it takes time for somebody to fully sit in their seat and to train them, no matter how good they are.
Yeah.
You have your way and your special touch of how you treat your clients. Like in any client relationship business, that's the way it works, right? In a professional service. And so it's going to take them time to get up to speed with, the way that your firm wants to do it. And so it's important that they be on board first and that there is good training for that continuity of service that your firm gets known for, right? And so that's important. And if the stair steps are kind of communicated and expected ahead of time in the plan, it's not quite as freaky as when you see it and then you panic, right? And so it's kind of like if you see that and you're measuring it, and then if you see if something's off more than just the expected stair step, and so that you could be proactive in the decision, or was this part of the plan?
Yeah.
Which
absolutely.
is why when you forecast, it's like I'll have like a 12-month or an 18-month rolling forecast, where especially within the year, it's pretty on target. And if something's off, there's an explanation as to why it's off, right? It could just be timing. Well, we had that expense this month, we expected it next month or something, right? Or it could be something big, like there was a huge hit of some sort of expense, or even market fluctuations, especially if you're billing on AUM.
Yeah.
Market fluctuations affect your revenue as much as it affects, right, your clients' asset holdings, right?
Yeah, absolutely.
So,
And so I guess one other leg of this conversation is talking about, so you need that real-time data. You need to have a budgeting function, and that budgeting function needs to be set for reality of just, okay, if you're growing, you're going to be acquiring clients, but you're also going to have to time the expenses of talent acquisition at the same time, and using fully loaded costs for that. So it's got to include like their payroll taxes and their benefits and their
subscriptions.
and
what
subscriptions
about all the
for software and
subscriptions
increasing your insurance costs
right.
and all that stuff. You want to figure out the fully loaded cost of a new person. And then when it comes to capacity, you're always going to have to be ahead, right? Like you can't sell 125 seats on a 100 seat plane.
Right.
You need to keep that excess. And then also important in the capacity management is, downtime. Like when you're figuring out the hours, it's like, okay, they're going to have training, they're going to have sick days, they're going to have holidays, they're going to have unproductive time during the day, they're going to have internal meetings, whatever, you got to have to back into what their actual capacity is, because they're not going to be at 100% utilization rate.
Right.
And then making sure that the unit economics is right for that. But then, I think at the global level, something that can be really hard to capture is efficiency of people. And, one point that you had brought up that I thought was great for us to talk about more is the silent profit leak inside your firm, the cost of process inefficiency, because that can be really hard to capture on a P&L. It is hard to it can be hard to capture that.
Right.
And, kind of talking about that issue in particular of how to capture when processes are inefficient, and it's not just a training issue with an employee or them onboarding. It's really, systemic issues.
Yes, and that is huge, and it can have a huge impact. But like you said, it's hard to spot, right? And so sometimes, and I recommend this to everybody. It's incredible, that saying, a picture's worth 1,000 words, right? I have started where I completely map out a process on a flow chart, because people think they know it and they might write it out of what they're doing. And I once did this for somebody just with their onboarding of employees, right? And I was talking to an HR manager, the director that was actually retiring. And I first wrote it out from what she wrote out her processes were. And she goes, oh, that doesn't happen there. But I color coded it and I made everything manual was in a particular color. And what they didn't realize is how much they were doing. And I said, if you use the right system, the right payroll system, it went down from looking like a paint can had splattered all over that paper to just two little things that were like phone calls at the beginning. and
Yep.
all the rest was taken care of. And she said to me, I had no idea how much work I was doing until I started talking to you. Now I'm exhausted, right?
Yeah.
And it's like you don't realize all the different steps you're taking, right? And then when you move to an automated system, but it's not automation just for the sake of automation. People make the mistake of trying to go to automation first.
Yeah.
And the problem when you automate it first is you could be automating and you could just be making a bad process happen faster.
Yeah.
Right? That's what's dangerous is if you go straight to automation. It was the wrong system. If we had automated just a few of those steps, it still would have been looping around and was the wrong system, right? So it's not just the most efficient, it's what's the most effective, right? And it's working through that. And it's really mapping out when you map it out. And so I really encourage people, we'll do this for clients and we'll go in, especially where they think their largest bottlenecks are, and we'll start there first. But we'll go in and they can do it, right? And they map out and write it in a flow chart.
Mm-hmm.
Because that will show you right away, you will see exactly where the bottlenecks are.
Yeah.
When you talk about it, it just makes sense and you keep talking it over, right? But if you see it in the process, it's amazing the effect that has. And you will see right there what needs to get fixed before you even start the automation.
Yeah, absolutely. No, and I enjoy that we get to do business in 2025 where there's so many good workflow tools now.
Oh, it's so much fun.
It's
right?
so much better,
Yeah.
in terms of being able to track all of those things. But I guess, Nancy, for people who are trying to learn more about the work that you do, could you speak a little bit about kind of how you work with firms, how people can get to know you better and connect with you?
Yeah, sure. Well, anybody wants to connect with me, I'm on LinkedIn, and we'll have, I guess, a link to my website as well. But really, if you want to work with me, and generally I'm with people that are RIAs growing larger, but what I've talked about, I'm happy to talk to anybody to help steer them in the right direction if they're not ready or large enough yet that it makes sense for them to be doing it at the level that I'm doing this at, right? But if they, once they work with me, I'm keeping that real-time data and I'm curating a budget and I'm helping them and watching them in real time so that they are aware constantly. Like sometimes people think, oh, that's just for larger firms to have that type of finance department. That's also like now in 2025, this is accessible.
Yeah.
To have but you just don't need everybody at a full-time basis of a huge finance department, right? But this sort of thing is accessible to be able to have this data and think of the impact it would make, right, on a firm. And in many ways, it's what you do, like the financial planning that's done for the individual. It's forward looking. It's looking at, where are you going to be in the future? Is it meeting what you need it to meet? Is it meeting your goals? And having that forecast. And then as things change, as the market changes, as all of that changes, you meet with the client and you sit and you say, something's different. We need to make adjustments. And that's really the business. It's like treating the business like you're treating your clients and giving your business the same attention and foresight that you give to your clients. And that's the type of work that we do. And we help them curate budgets, or we help them clean up their data to work with accurate data so that they're making strategic decisions based on good data, right?
Yeah. Absolutely. That's wonderful. So for those of you listening, we're going to post links to how to get in touch with Nancy via LinkedIn, also her company website. You can check that out. I do encourage you to reach out and say hello, and feel welcome to send me a DM as well on LinkedIn. I'd love to hear what you thought about this episode and questions that you have as we think about follow-up episodes on these kinds of topics. But for those of you listening, this was another episode of the Financial Advisors Want to Know podcast. And thanks again, Nancy, for coming on the show.
Thank you.